Paul, good morning to you from London. What do we make with a little bit of distance then of the yen intervention? We are currently at 158 on dollar yen. So the yen has given up half of the gains that it made since that intervention. And if the US doesn't want to devalue the dollar or sell any treasuries, does that raise questions about whether this is going to work or not? What are you hearing in the region?
Yeah, good morning, Anna. I do think that there are question marks around the intervention and whether you could call it a success. I'd say the jury is probably out in that respect. A rip-roaring success. I think the local commentators would say would have taken the dollar-yen cross below 155. On the other hand, it's not like you can say that it has failed at this moment in time. We do have the yen reasonably decent amount stronger and away from those mid-160s that we were getting towards before the intervention took place. But I think there's another extra dimension to whether you can call it a success or not, and that is the unintended consequences that the action or the support of the US has raised this week. And it's sort of brought into a question several different factors. One, I guess, if you were the US people making the decision on this, you would think your very presence in the market would be enough to really reinforce and back down or double down behind the Japanese authorities. But I think that that hasn't necessarily played out all that much. And like you said, intervening by using the euro and shifting assets that way rather than a straight dollar support damps the message somewhat. And I think it's also raised some question marks about, how worried the US is about the treasury market and higher yields too.
OK, well, in lieu of another intervention, as we await another one maybe, Paul, we've got the payrolls print coming out of the US this afternoon. How much of a reaction would you expect to see in the yen and JGBs?
Yeah, I think that the Japanese will be wanting to pay attention to it, Lizzy, because particularly a weak number, which pushes the dollar down, could be helpful in supporting the yen. But on the flip side, a strong number that gives people more reason to suspect the Fed might be able to move towards hiking at some point soon. Could be another reason to push the dollar higher and therefore to weigh against the yen again, and therefore raise those risks of another intervention in the market at those times towards the end of the week when we're seeing less liquidity.
And what about the Treasuries market and how it's positioned going into this number, Paul? Of course, yesterday was all about higher oil prices and therefore higher yields. Mm-hmm.
Yeah, exactly. So the Treasury market is also going to be on edge as well as the Japanese bond market. We've got those yields very close to the highs of the recent cycle. And I think that the market is looking for 80,000 for payrolls. That's a pretty decent number. I think that would be enough to convince people that the economy is looking okay without being worried that, everything is going overheating. But a bigger number than that, we might see more of a sell-off. The market is pricing or leaning towards a Fed hike at some point, but it's not really convinced yet. So a big number, and they might lean more into that and push up those yields further.